Hey man, do you have a meeting with SACE on Friday? I reached out to my colleague Nick to see if he was seeing what I was seeing. Nick and I had served as the primary behind-the-scenes analyst muscle at Legacy Research, really almost from the beginning. Nick got right back to me. Yeah, Joe, I have a meeting on Friday at 2 o'clock with him. It's kind of weird. Usually we have a conversation about, what time would work best for our meetings. This time he just set it up unilaterally without any explanation. Okay. Well, Nick, I've got a meeting with him at 1 o'clock just before you do. Dude, we're definitely getting fired on Friday. I couldn't help but chuckle as I said it. I'd spent the last few years watching Legacy Research devolve from what I'd considered to be the best and most interesting investment research outfit in the financial publishing universe to what could only be described as a clown show. The lead publisher had left us years ago and was never replaced. The COO had been gone for nearly a year. All the best analysts had walked away, and that was either because they saw the writing on the wall or because they had an explicit disagreement with management. And now the person who was thrust into the position of editorial director a few months prior was setting up kind of a shady unilateral meeting with us. That's Nick and I were the last of the OG analysts. So it was obvious to me that this was the end of the road. And it really was comical that they were trying to be so secretive about it. To me, it was a fitting end to a saga that would make for a killer episode of CNBC's American Greed. Hello and welcome to episode 5 of the Phoenician League podcast. I'm your host, Joe Withrow. I'm laying out my background for you in these first several episodes so you have a feel for where I'm coming from. We'll get into more timely market analysis and economic commentary soon, but I think it's important to make sure that I'm transparent about the experiences that shape my perspective. I covered my experience in the corporate banking world and how I escaped the rat race in our first 3 episodes. And then in episode 4, I shared my experience breaking into the investment research and financial publishing industry. I attribute everything that I've become professionally today to that experience. But after having enormous success and really a lot of fun, our upstart publishing business really became a slow train wreck. It all started when our parent company, MarketWise, was gearing up to go public in 2020, just as the COVID hysteria was ramping up. The nuance there is that MarketWise didn't pursue a traditional IPO. Instead, it agreed to do a reverse merger into what's called a special purpose acquisition corporation, or a SPAC. A SPAC is basically just a shell company that somebody set up and then took public without an active business. In this case, it was a British entertainment group called Ascendant Digital. So the benefit here for MarketWise is that Ascendant Digital handled all the regulatory work and took care of the expenses necessary to set up a publicly traded company. So MarketWise didn't have to deal with any of that. The downside is that the founders of Ascendant Digital got a ton of equity in MarketWise, a bunch of stock warrants, and they got several seats on the board of directors too, and that gave them influence over the direction of the company. Then, shortly before the reverse merger was scheduled to take place, MarketWise's CEO and founder just abruptly resigned. From what I understand, and this is what the founder said himself later publicly, is that these guys effectively pressured him to resign, and they told him that the investment banks wouldn't proceed with him as the CEO. They wouldn't do the IPO or the reverse merger. So if he didn't resign, it would blow the IPO up for everybody involved, which would entail hurting his co-founders. And that's because they could only exit their positions and finally retire if the company went public. So the founder decided that he didn't want to harm his business partners, and he reluctantly resigned, and that's when everything started to change. MarketWise appointed an executive who happened to be an attorney that specialized in mergers and acquisitions as the new CEO. Shortly after, what had been a stellar business went into a slow freefall. So up to that point, MarketWise was a business that put up financial efficiency metrics that are similar to a top-tier software company. It operated at over 80% gross margins, which made the company enormously profitable. And under the founder's leadership, MarketWise was producing somewhere around $100 million a year in net income. So a chunk of that money was paid out to private shareholders in dividends. Another chunk was paid out to key employees in bonuses. And then another chunk was invested to make the company's balance sheet bulletproof. And that was to give it, MarketWise the resiliency it may need to weather any market downturns in the future, which typically in this line of business would result in slower customer acquisition. So all that's to say, this was a business that had been in operation for over 20 years, and it was being run in such a way that it would continue operating for many decades into the future. All decisions, as best I could tell, were made with a long-term focus, which meant satisfying customers and prudent financial management. But all of that changed after the founder was ousted. So at Legacy Research, we're, a company that's underneath the MarketWise umbrella, we were suddenly being pushed to maximize revenue above all else. Where we once had a strongly enforced culture of analytical precision, suddenly all the focus started to shift towards marketing. So from the analyst bullpen, we didn't understand it at the time, but they started hiring marketers hand over fist. At one point, I believe the marketing department consisted of over 90 people. Everything had become about marketing. Perhaps seeing the writing on the wall, our lead publisher and editorial director abandoned the ship very early, and she was never replaced. Then, one by one, our best analysts started bailing too. Among other things, they were being pressured to make unreasonable investment claims for the sake of spicing up the marketing promotions, and that's just not what they had signed up for originally. Most of those analysts, they were never replaced either. The ones who were replaced by younger guys who had experience in producing content, not in investment research and analytical precision. And in fact, they found one of the replacements directly on YouTube and brought him in. So that was an obvious signal. Everything was about marketing and appearance now. The name of the game was to maximize revenue in the short run, not to produce excellent investment research that would engender long-term relationships with our customers. Now, being behind the scenes, Nick and I, we didn't have the same pressures that the other analysts did. We were not customer facing, so we were insulated from a lot of it. And that's why we stuck around the longest. But still, we could see clear as day what was happening. And at first, I was angry about it all. For starters, I joined the company initially because I admired the business from the outside. I was a customer myself. And the top analysts were really my heroes, I had the great pleasure of meeting them and learning from them directly in person when I joined the company. And as I mentioned last week, suddenly I found myself up there giving presentations to these guys at our big idea conferences in Miami each year too, because I quickly became a prominent analyst inside the company myself. And I was very proud of that. And I was also excited about the company we had built. We had interesting characters. We had tons of ideas between us, and we had an immense amount of brain power, all under one roof, which was just incredible. Well, every single one of those analysts left the company, and I think largely in disgust. I kept in touch with most of them personally, and they shared with me privately some of the dirty laundry that drove them away. And at the same time, our compensation was dramatically curtailed for those of us who stuck around. So where we would previously receive cash bonuses in proportion to our contributions to the business, with the original founder gone, our bonuses were replaced by stock grants. And here's the kicker. Those stock grants vested over a 4-year period, with the first vesting date being 12 months out. So for the first year, you had nothing but an IOU, meaning you would get some stock if you were still employed in a year's time. And then if you made it that far, you still only got 25% of what you were promised, and then it gets taxed, so you don't even get the full amount. You got to pay taxes on it right away, which typically they just take some of the shares and sell them to pay the taxes. All right, so you effectively get less than the 25% that vests, and then the promise is you'll get another 25% if you stick around for another year. So that structure just seemed off to me. It was just so one-sided that it did not at all come across as a bonus for good work. Really, it, to me, kind of seemed disingenuous, which I didn't care about the money part of it. By that point, I'd already built up my own financial house to where I didn't have to make decisions based on money anymore. But I did care about the principle of the matter. When you work your tail off to help build something, it's nice to participate in that success. And it's a little bit of a slap in the face to be cut out of that success. Well, that said, guess what happened? Over the course of the next year, MarketWise stock plummeted by over 80%. And part of that was due to declining performance, which was not at all surprising given the change in management. But I think a bigger part of the massive decline was due to the founders of the SPAC seeming to dump all of their shares on the market pretty much immediately. And then thanks to their board seats, they somehow got the company to exchange their stock warrants for more stock despite the massive drawdown, despite the fact that the stock had plummeted in value. And it looks like they sold out of all those immediately too, which further pushed down the share price. So I'm watching this happen and I'm like, man, these guys look like they're just straight pirates. Pirates, they effectively redirected a massive portion of the company's value to themselves. And I believe they walked away with hundreds of millions of dollars while the remaining shareholders watched their stock price collapse, watched their holdings collapse in value. So for my part, I'm now looking at my stock grant bonus that I can only access 25% of each year for 4 years. And it's now worth 80% less than it was before. And I couldn't help but laugh, It's like, not only is it worth 80% less, but I only get 25% that first year and I got to pay taxes on that. And so all of a sudden it's just this minute amount. And I'm just laughing. It's like, guys, thanks for the bonus. Then MarketWise's first annual report as a publicly traded company came out, and somehow the story got even worse. So as I mentioned earlier, the company was doing around $100 million a year in net income previously. So that's money hitting the bottom line. It was a fantastic business. Well, somehow under the new management and after the massive value extraction, that $100 million in net income disappeared. There was no more net income. The company in that first annual report reported a net loss. So I'm like, well, where'd all that money go? Now, to be fair, we lost a bunch of customers, but we didn't lose all of them. I don't think we even lost 10% of them that first year. I believe we still had nearly 1 million paying customers that were on an annual subscription for our investment research. So where did the money go? How does $100 million just disappear over 12 months? Well, we know where 12.16 million went. Remember the attorney who was appointed CEO when the founder was pushed out? Well, the board fired him as a scapegoat after the stock price collapse. And it turns out that he had essentially a golden parachute that entitled him to 12.16 million in cash severance plus some stock compensation, some non-cash compensation in there as well. So the stock loses over 80% of its value during this guy's tenure as CEO, and the company's profitability evaporates. And somehow he walks away with over $12 million. And I'm like, wow. I mean, I watched some episodes of American Greed when I was a kid, and this would make for the perfect episode. Needless to say, I was angry about all this. Watching something you built with passion and putting long hours into, watching that get strip mined and then pillaged, and then watching good people get screwed over by bad people, that does not sit well with me. And there were plenty of nights when I would stay up late stewing on it. And I even emailed the founder once or twice on those nights, and he would email me right back. I guess he was sitting up late stewing on it, being angry too. At the same time, this experience is what prompted me to flesh out my idea for what became the Phoenician League. I'd really seasoned my analyst skills. I had honed in on a particular investment strategy that I believed to be the most dynamic, and really, I think most importantly, I'd actually put my strategy into practice. So I saw firsthand that it worked, and I had a clear vision for how I could bring these ideas to investors and help them with the implementation, which is something that nobody in the investment industry does. So, when I figured out that I was getting fired on that Friday afternoon, I was good with it. I'd largely moved past my anger, and I was excited to focus on building the Phoenician League. I couldn't help but chuckle again when I got a message that Friday from the pseudo editorial director. He sent me a message. It was about 10 minutes ahead of our meeting that Friday. And it says, hey, Joe, just so you know, an HR rep is going to join us on our call. And I just couldn't help myself. I wrote him right back. Okay, great, man. I'm really looking forward to it. And I just have to laugh thinking about it. This was a good guy. I knew he was in a tough spot. And he saw the ship sinking just like I did. But I couldn't help put him on the spot with my message. As best I could tell, he somehow thought that I didn't know that I was getting fired. So when I said I was looking forward to the call, I just laughed thinking about what must have been running through his mind. All right. So then we get on the call, And I just jump right in with cheer and enthusiasm, Ace, man, how you doing? Oh, it's so good to see you. And he's got this somber look on his face, and he kind of nods, but he didn't smile. And he says, "Oh, well, Joe, I'm doing okay." And then he introduces me, "Joe, this is Joanna from HR." So I jump right in again. "Hey, Joanna, how are you today? It's very nice to meet you." And of course she puts on the stone face too, and she just says hello, and I'm just chuckling because that must have been so awkward for them. So then he gets right into it. "Joe, we just haven't had the success to keep everybody around. Unfortunately, we have to let you go." "Man, you getting rid of me, Sace? Was it because of that email I sent?" I couldn't help but keep the game going. No. It's nothing about you. It's just that we have to downsize." It took a few minutes, but he finally realized that I wasn't really upset about getting canned. Really, it was interesting. I'd never been fired before, but apparently the HR rep has to go into a bunch of liability-related stuff, and I made jokes about all of it. Some of my facetious comments and questions for the HR lady had the guy who was firing me laughing like crazy on the call. At first I could see he was trying not to laugh, like he's trying to hold it in, but he just couldn't help himself. And he had to mute his microphone to keep from laughing hysterically in the HR lady's face, which is probably frowned upon. So I'm like, man, getting fired can be a lot of fun. But anyway, that's how my stint with Legacy Research ended, but the saga didn't exactly end there. Ironically, the founder who had been pushed out started buying massive amounts of MarketWise stock after the SPAC guys and the incompetent management team had crashed it. So he pretty quickly accumulated enough shares to give him a controlling interest in the company, at least with a few key partnerships on the board of directors. And so in a contentious board meeting, he gets named CEO and chairman of the board in October 2023. He took the company back over. From there, he immediately ordered a detailed internal review of the company's operations. He restored the dividend payouts that had existed, previously, and he fired the people that he held accountable for tanking the company, basically. A few months later, if I remember correctly, is when he shut down Legacy Research completely, based on the findings of the internal review. Now, this was in an SEC filing. It basically just said it can't be salvaged. We just got to shut down the whole thing. And I couldn't help but wonder when I saw that, was Joanna, the HR lady, was she now sitting on calls to fire the people who had fired us? I guess it all comes full circle in the end. And by the way, everything regarding this MarketWise saga, it was all aired out in SEC filings. This is all information that's in the public realm. I'm not sharing anything that isn't already out there. And for the record too, I believe that the company has since taken strong steps to clean everything up and to repair the damage that was done. It looks to me like everything is going in a better direction now, but I'm sure it was a massive uphill battle to try to climb out of that hole. As for me, I'm forever appreciative of that opportunity and that experience. I used it to hone my own skills, and I became friends with some incredibly impressive people. And based on my insider's viewpoint of the industry, I also developed a solid understanding of where the gaps are. That experience, watching something built with care and purpose, watching that get stripped down for short-term extraction, that's just another chapter in the education that shaped how I think about money, markets, and really it's the difference between building something that's real or just doing something to extract value. Once you see it, you can see it. You see it one place, you can see it other places too. So that helps me as an investment analyst. So all this gave rise to the Phoenician League. I'll tell you all about its origins and how it all came together next week. That's going to do it for today's episode of the Phoenician League. If you found any value in today's conversation, please subscribe to stay plugged into the network. We put out new episodes every week. And if something we talked about today made you think differently about money or investing, please leave a review and let us know. That helps the show reach the people who could really benefit from it. And remember, financial freedom does not start with money. It starts with understanding and a fiercely independent mindset. So if you would like to dive deeper into the topics we cover, I invite you to get on the Phoenician League email distribution list at PhoenicianLeague.com. We often send out detailed written analysis on the various investment opportunities and the asset classes that we advocate, and we connect the dots across what's actually happening in the global economy. And then we host online strategy sessions periodically as well, where we can really drill into how to take full command of your financial future. So stay connected at PhoenicianLeague.com. And until next time, let's stay smart and let's stay independent. This is Joe Withrow, signing out.